Hello and good day to everyone. Every business should have a good understanding of the entries. Understanding this data will be very useful to understand our own performance, health, and review the way we manage our own business. Regardless of your sector or industry, it is likely that your financial department is the beating heart of the entire operation. Without financial fluency, it is hard for an organization to thrive, which means that keeping your monetary affairs in order is essential. As a business, you need the reliability of frequent financial reports to gain a better grasp of your financial status, both current and future. In addition to empowering you to take a proactive approach concerning the management of your company's finances, financial reports help assist in increasing long-term profitability through short-term financial statements. Here are some of them.
Profit and loss, or also known as the income statement, is one of a company's core financial statement that shows their profit and loss over a period of time by comparing the period by another one. It quickly becomes very clear how the company make progress. The total revenues and expenses of a company are listed on its income statement. A company must consistently be making long-term profit for it to be considered a good investment choice. This information can only be found on the income statement.
On the other hand, the balance sheet, or also known as the statement of financial record, an entity of assets, liabilities, and the difference of total in the last moment of accounting period. It is the summary of all the report. It gives a glance of a specific date of what the owner owns and what it owes on that date. It also shows the financial records that is completely balanced. According to accounting equation, asset is equals to liability plus equity.
Now, let us see the progress of our company Valentin Apparel Co. for the year 2014 using the following statements. First, let us start with the profit and loss, or also known as income statement.
For the year 2014, the net sales is 5,250,000 pesos and the cost of sales is 4,305,000 pesos. To solve for the gross profit, subtract the net sales and the cost of sales. 5,250,000 pesos minus 4,305,000 pesos is equals to 945,000 pesos. The gross profit is 945,000 pesos. To solve for the operating income, subtract the gross profit and operating expenses. 945,000 pesos minus 314,750 pesos is equals to 630,250 pesos. So the operating income is 630,250 pesos. Next, subtract the operating income and interest expense to get the income before taxes. So, 630,250 pesos minus 250,000 pesos is equals to 380,250 pesos. So, the income before taxes is 380,250 pesos. Lastly, to solve for the company's net income or loss, subtract the income before taxes and taxes. 380,250 pesos minus 114,075 pesos is equals to 266,175 pesos. The company's net income is 266,175 pesos.
As we can see, our company, Valentin Apparel Co., was able to make a total of 266,175 pesos worth of net income. This means that our company made a huge progress compared to the later years. Next is the balance sheet, or also known as the statement of financial position. Analyze all the records that are given, whether it is an asset, liability, or an equity. After analyzing all the records, identify whether the asset or liability is a current or non-current. So, let us start with our company's assets. Current assets include cash, receivables, inventories, and other current assets. To solve for the total current assets, add all these records. So, 1,060,000 plus 2,300,500 plus 4,850,000 plus 1,050,000 is equals to 9,260,500. So, the total current assets is 9,260,500. Next is the total non-current assets. This includes the property, plant and equipment, and other non-current assets. To solve for the total non-current assets, add all these records. So, 2,440,000 plus 835,689 is equals to 3,275,689. The total non-current is 3,275,689. To solve for the total assets, add the total current assets and the total non-current assets. So, 9,260,500 plus 3,275,689 is equals to 12,536,189. The total assets is 12,536,189.
Next is the liabilities. Current liabilities include notes payable, trade payable, income taxes payable, current portion of long-term debt, and other current liabilities. To solve for the current liabilities, add all these records. So, 5,050,000 pesos plus 28,520 pesos plus 2,250,000 pesos plus 85,600 pesos is equals to 7,414,120 pesos. The total current liabilities is 7,414,120 pesos. Non-current liabilities include long-term debt, net of current portion, and other non-current liabilities. So we only have one given, which is 2 million pesos. The total non-current liabilities is 2 million pesos. To solve for the total liabilities, add the current liabilities and non-current liabilities. So, 7,414,120 pesos plus 2 million is 9,414,120 pesos. The total liabilities is 9,414,120.
Lastly, we have our stockholders' equity. Equity includes capital stock and retained earnings. To solve for equity, you simply have to plus 1 million pesos and 2,122,069 pesos. The stockholders' equity is 3,122,069 pesos.
To solve for the total liabilities and total stockholders' equity, add the total liabilities and total stockholders. So, 9,414,120 pesos plus 3,122,069 pesos is equals to 12,536,189 pesos.
As we can see, we balance the given records, which means that our company, Valentin Apparel Corporation, because the total assets should equal the total of liabilities and stockholders' equity. Throughout the years, our company, Valentin Apparel Co., experienced a lot of ups and downs. With the help of these financial statements, we can assess our company's financial health and performance. Furthermore, it helps determine the state of the company's liquidity risk, business risk, financial risk, and credit risk. For any business keen to remain relevant in an increasingly competitive marketplace, the importance of financial statements cannot be overstated. Basically, a business cannot survive without these financial statements. That's all for this video, and thank you for watching.